What's up, everybody? Sal here with Simply Investing again. I kind of wanted to respond to this comment. Uh, Obviously, as if you can't afford to pay minimum wage, then the business shouldn't exist. So let's discover that. Me as a business owner, I own a moving and logistics company, cleaning company, construction company, furniture store chain, right? We own a lot of business and a property management company, a lot of stuff, right? And I wanted to kind of say, like, I think he missed the point on that. Now, yes, if you're paying under the table purposely, then you probably shouldn't exist in business because you're purposely hurting people because they're not paying their taxes, they're not registering Social Security and all that stuff, right? But if you are paying the minimum wage at the time, which is maybe, let's just say $10 to make it even, right? $10. I know it varies from state to state, but if you go from $10 to $20, it's a huge financial cost for the business. Now, you may not know it, but on the other side, which it's not to your fault, thousands and hundreds of thousands of people don't know until they start their own business that you have employer taxes on their wages, matching Social Security, the federal income tax, state income tax, sometimes county income tax. You got your other taxes. We get taxed on how many people. So like when I was building my moving company, when I crossed 50 people, my tax bracket went up for the business and my taxes went up. So there's taxes where we're being paid all the time with these. And if I double my wages, then my taxes rise. But that's not just it. You have workers' comp as well. Mandatory, especially in state like California, it's mandatory. Workers' comp off of minimum wage, if you have 20 minimum wage associates, is already going to be about $300,000 a year, probably. Everybody falls short. Now, if you double that, you're talking about on a business that may only do, let's just say it does $3 million in revenue. And we're not counting the costs of goods sold, like not even the labor part. We're just talking about the labor. We're not talking about like the supply chain and everything. And now you're paying double. So now you're going to pay almost over $500,000 just on payroll. Now, of course, the managers are like, well, what WTF? We want more money because now these guys are making money. So then you're like, okay, well, where can I maintain the profit levels? Because California is still taxing me at 33% of my profits. So how do I maintain this? And I can tell you right now, it's in the long run, it's just disaster. Because it has to be fair and it has to be equitable. And it's usually negotiated between employees and employers. And it'll naturally rise. Whether you like it or not, that's just how supply and demand works. I don't know how else to say it. But we look forward to seeing all your guys' responses, so we'll talk to you later.